Hey everyone, I'm Justin Landis, and welcome to the Landis Look, where we're going to take a look at the world of real estate through the eyes of some folks who've done it a long time. Today, those eyes are mine. And anybody out there like numbers? Anybody a numbers person like me? Well, today you're in luck. I got lots of numbers. I'm not going to try to make you read it off of this little piece of paper. I'm going to share with you what the year-end market stats were, how the Atlanta real estate market wrapped up in 2018, and then we'll make a bunch of predictions about what's going to happen this year. Actually, I may not make a bunch of predictions, but we'll try to interpret the data and see what we can come up with. So here is the year-end takeaway for December for overall Metro Atlanta. This is whole Metro Atlanta, and these numbers are good. There were 2.9 months of inventory. Houses were selling at 96.8% sales price to list price, so sellers only negotiating about 3%, and the days on market were 32. So let me kind of tell you what that means a little bit. So 2.9 months of supply, here's how months of supply is calculated. That means if no new properties came on the market, how long would it take for everything to sell at the current absorption rate? So let's see if I can do some math here off the top of my head. If there were 12 houses on the market, 2 were selling per month, so over the last 3 months, 6 houses had sold, there would be 6 months of inventory because there'd be 2 selling per month, and it would take 6 months for all 12 houses to sell. And that's a balanced market, 6 months. In Atlanta, 2.9. So that's definitely a seller's market. So seller's market, there's a lack of inventory. 96.8% sales price to list price means there's not a lot of negotiation. House is selling in a month. That's pretty great. But that's overall. And so one thing, once again, can't see it on this chart, but one thing that is really interesting is at price points under $750,000, it is definitely in that seller's market. All the months of inventory are under 6, even as low as down in the 200 to 250, 1.7 months of inventory. That is very few houses on the market, way more buyers than sellers. But as you get up above 750 to a million, 7.8 months, a million to 1.5, 12 months, same thing at 1.5 to 2. And so you move into where there's more selection and it's a buyer's market. And so here's one of the big opportunities that this presents is if someone, a lot of times people call this a move-up buyer. You're moving from a house that is under 750 to a house that's above. And obviously these numbers change by neighborhood. But you can have a real opportunity to sell in a really strong seller's market and then have more selection, more negotiation, and buy in a buyer's market. Second thing that I love to do when I look at the numbers is I like to see how does one year compare to the other, because knowing that there's 2.9 months of inventory, that really, I mean, it tells us a snapshot of now, but it doesn't tell us what direction the market is moving. Because were there 6 months last year? Was there 1 month? Don't know. So here, got this beautiful chart that you can't read either that compares last December to this December. And so these numbers actually are pretty interesting. So get this. The number of houses on the market, 14% higher in 2018. I bet a lot of you, if you were looking for a house in December, you're like, it doesn't seem like there are way more houses on the market, but there actually are a lot more houses on the market than there were previously. And 12% less went under contract. So a lot fewer buyers and sellers got together this December than last December. And that's the 3rd month in a row in Metro Atlanta that the number of pendings have gone down. So that's a definite trend. That means in October, November, December, less people bought houses or put houses under contract to buy than they did the previous year. And that's a definite trend, right? I mean, that shows a softening market. And so we've got that market softening going on. I think a lot of people who are selling a house or a lot of real estate agents, if you ask them, do you expect that to be the case? A lot of people would tell you, yes, that is the case. A little bit harder to sell, not as much stuff going under contract right away. But here's the interesting thing about that. What's happening is there's really forming 2 markets. Because here are the numbers for the houses that sold. So these are only for houses that sold because you can't have a days on market if you haven't sold. The days on market from 2017 to 2018 went down. The median sales price to list price went up. That means sellers are getting a higher percentage of their asking price. And the median sales price was up 8%. That's a big year over year gain. And so for the houses that are selling, they're doing great. They're selling with better stats than they did a year ago, but you have more houses not selling. And we see this. And so, I mean, the takeaway from this, if you're thinking about selling a house this year, you got to price your house right and have it in great condition. Because if you do sell the house quickly, you get an offer quickly, people are getting great offers. They're selling quickly, they're not having to negotiate much, and there are buyers out there. But if you miss that initial mark, way more likely to fall into that camp of on the market and not selling, or on the market and, once you've been on the market for a while, think about this. You're looking for a house. House has been on the market 3 months. Are you going to make a full price offer? Most people probably not, right? You're going to make a lower offer. You're like, hey, this house has been on the market for 3 months. And that is what the statistics bear. The longer you're on the market, literally every week on the market, you get a lower sales price to list price. So if you're going to sell a house this year, price it right, make sure the condition is in line and the condition is good. The days of, hey, I can just price my house at anything, leave the dirty dishes in the sink, not take out the pets. I mean, that may be a bit of exaggeration, but the last couple of years in the spring, basically everything has sold regardless of price and condition because there's been such a demand to buy houses, and that's for sure shifting. Final thing though, to break this down, what's happening year over year, because I did not expect to see this. And so looking at year over year by price point. So do you think that houses under 300,000 or houses above 300,000, and that's about the median in Atlanta, do you think that there has been more weakness below 300 or above 300? I can't see you, so I don't know what you're guessing. I would have guessed above. I would have guessed the higher up in price that the more the market was softening because there's more inventory. But that is actually not the case here. I drew a line, which you can't tell what's above or below it, but above is obviously less expensive, below more expensive. So under 300,000, you're seeing numbers like this: 150 to 200, 25% fewer pendings. 100 to 150, 44% fewer pendings. 200 to 250, 7% fewer pendings. 250 to 300, 9% fewer pendings. And you have more actives in a lot of those price ranges too. And so you're like, hey, why would this be? I mean, this is a market that has been so strong and there's so little inventory. Why would less be pending? Well, here's just a guess. Here's my guess on it. Interest rates have gone up a bunch over the last year. That hurts affordability, right? It makes the same house more expensive each month because interest rates are up. And I think at that price point, a couple things. One, people may have tougher qualification where, hey, the interest rate rising means I'm going to keep renting and not buy. Or two, hey, I can't really raise my price point now, and the houses are a little disappointing. Just think about this: 8% median sales price gain. So market went up 8%. And then say interest rates were up 0.75 points. That ends up being a big difference in your monthly payment compared to a year ago. The houses are just less affordable, or the house you're looking at is not as good because it's in a lower price point for the same budget. And as you get above 300, I was pretty surprised by these numbers, but 350 to 400, pending's up 10%. 500 to 600, 4% up. 600 to 750, pending's up 15%. 750 to $1 million, pending's up 25%. Those are positive numbers. And once again, it's why you got to get down into the statistics and can't just take the market as a whole. And so for any of you out there, let me make that offer to you. Send me an email at justin@justinlandisgroup.com. I've got these statistics and we can do an interpretation for you on all of these in your own neighborhood, in your own part of the market. We're happy to do that. Would be a really long video if we did that individually for everyone here. So to give you a couple of takeaways, I mean, the overall market in Atlanta is still good. Houses are selling. As we look at this year, we have a lot of buyers and a lot of sellers who are planning to be active this year, buyers looking for good houses. And we have a lot of great houses that we've already met with the sellers who are going to give the buyers some good choice this year. And so one of the things that I love the most about a market where the stats are mixed a little bit is that presents opportunity. In a market that is unbelievably buyer heavy or unbelievably seller heavy, your opportunities are typically only on one side, buyer side or seller side. But here, because you've got a little things going on in different parts of town, different price points, this could be a good year to be opportunistic in the real estate market and maybe trade one property out for another, add value, pick up something. So if you have any questions, once again, send us an email, justin@justinlandisgroup.com. Happy to get into this in more detail. Also happy to email this stuff to you since obviously this is not a very high quality look at it. So hope you guys enjoyed. We'll see you again next week. Thanks.